Neobanking and Digital Banking. Episode 3: Trust Without Branches, Regulation, Security, and the Challenge of Legitimacy. Would you trust your salary to an app? No branches, no tellers, no vaults, just code, servers, and a promise that your money is safe. That's the question millions of people around the world are already answering with yes. The trust problem. For over a century, banking was built on buildings, marble floors, glass offices, and a handshake from your local manager. Today, those symbols of trust are gone. You open your bank account from your phone in 3 minutes, and your customer service agent might be an AI chatbot. So how do you trust something you can't see? That's the challenge of neobanking, creating legitimacy in a world without physical presence. Trust used to be built on appearance. Now it's built on regulation, security, and user experience. Regulation, earning legitimacy. Let's start with the foundation, regulation. Without it, no neobank would survive. In the UK, where the fintech boom exploded first, regulators like the Financial Conduct Authority, FCA, set strict standards for digital banks. Companies like Monzo, Revolut, and Starling Bank had to earn full banking licenses, meaning they're supervised just like Barclays or HSBC. In Europe, N26 faced a different story. It grew fast with over 8 million users, but regulators like BaFin, Germany's financial authority, demanded stronger compliance after cases of poor customer verification and fraud attempts. The message was clear: innovation can't come without control. And in Latin America, Nubank, now one of the largest neobanks in the world with over 100 million clients, succeeded partly because it worked with regulators, not against them. The Central Bank of Brazil became a key partner in making digital finance legitimate, setting clear rules for transparency, anti-fraud systems, and capital reserves. The result? People now trust Nubank with salaries, credit cards, and savings, things that seemed impossible for a digital-only bank 10 years ago. Security, the invisible backbone. But regulation alone isn't enough. Trust must also be earned through security, and that's where neobanks have pushed technology further than most traditional banks. Take biometric authentication. Face ID, fingerprint logins, and real-time behavioral analytics make hacking harder than ever. Revolut introduced in-app freezing of cards. One tap and your account is locked instantly. Chime in the US uses AI to monitor transactions and block fraud before users even notice. These innovations make people feel safer, not because they understand encryption, but because the experience itself communicates protection. That emotional side of security matters more than people realize. When you get an instant notification after every transaction, that's not just a feature. It's digital trust in action. Partnerships, credibility through collaboration. Here's another secret: many neobanks don't operate fully alone. They often partner with traditional banks behind the scenes for deposits, insurance, and compliance. For example, Chime in the US isn't technically a bank. It partners with the Bancorp Bank and Stride Bank to hold customer funds. This hybrid model gives users the speed of fintech and the safety of regulated institutions. In the UK, Starling Bank and Barclays have shared payment infrastructure to ensure liquidity and transaction reliability. And in Europe, Wise, formerly TransferWise, collaborates with dozens of established banks to manage global transfers under strict European central bank oversight. These partnerships create a bridge between old and new, one built not on logos, but on shared credibility. The psychology of trust. Let's be honest, trust isn't just about rules or encryption. It's about emotion. People trust what feels transparent, consistent, and human. That's why some neobanks use bright colors, friendly design, and clear language, breaking away from the corporate tone of traditional finance. When you see your balance update instantly, get cashback in seconds, or talk to a real support agent on WhatsApp, that's emotional design at work. It turns digital abstraction into human connection. And that's exactly why trust without branches is possible. Because when transparency replaces mystery, and responsiveness replaces bureaucracy, trust moves from the physical world into the digital one. Conclusion: no trust, no fintech. No regulation, no future. The future of finance won't be decided by who has the best app or the flashiest card. It'll be decided by who people trust with their money, and that trust must be earned, not assumed. Regulation gives fintechs the right to exist. Security gives them the right to grow. But legitimacy, real trust, gives them the right to stay. Because in the end, without trust, there's no fintech. And without regulation, there's no future. Don't lose this transformation, it is happening right now. Subscribe now and join the journey. Next time, we'll see how neobanks are transforming entire economies by bringing millions of unbanked people into the financial system. That's episode 4, Emerging Markets and Digital Inclusion, Banking the Unbanked.